Welcome to TradeSpoon. My name is Vlad. I'm CEO and founder of TradeSpoon, and today I'd like to go over current market conditions, key support and resistance levels on spiders, SPY, trade of the week, and also my take on the market short-term and long-term. Disclosures are very important. Please read them. I encourage you to visit optionscreening.com if you're new to trading stock and options to understand the risk associated with trading stock and options, and you can pause the screen to read the remaining of the disclosures. All right, let's take a look at spiders. Again, I'm looking at the artificial intelligence, right? This is our model based on AI, based on neural network. It learns on the data that we feed, mostly just technical data, volume and price action. It makes prediction for the next 10 days. It still sees that bulls are in control, slightly positive bias. Again, we are knocking on the door of 50-day moving average. 50-day moving average, we tested it last week successfully. We're testing it again. So far successfully. We do have FOMC and ECB decision behind us, so bulls are winning. We have Apple earnings and unemployment data. So that will set the tone whether the model is correct in terms of the current bias or whether we're going to break and trade below 50-day moving average, which is around 406. If you zoom out and look at the monthly data, model doesn't see a lot of momentum be above 420. So we have reached 420. It has been year-to-date high. Model doesn't see a lot of momentum above that. So that means, can it go higher? Maybe. Maybe it can go to 425, 426 if Apple hits a home run. Or CPI data is better than expected next week. But I would not chase that rally. I think there's more room to the downside than to the upside. You can see regional banks already breaking down, right? If you look at the weekly chart, and reaching pandemic lows. So still issues with regional banks and credits and and loans. Still issue with 10-year yield sitting at this key support level, and so is 2-year yield. So a lot of asset classes, including small cap stocks, banks, are sitting on important long-term support. So it's kind of a make or break for the market, including gold miners. It's a make or break setup for the market. And a lot of it is on the shoulders of Apple and unemployment. So we could have this next move, this breakout as early as this week or maybe after CPI data, or we continue to trade in the range. That's also a possible scenario, I guess, for the next couple of weeks. Personally, I think it's just a matter of time for the spiders to break through this, get back to this downtrend and start retesting the December lows. Whether it happens in, second half of May or first half of June, we'll have to wait and see. Unemployment data tomorrow and then CPI data on Wednesday. Personally, again, I have more bearish position than I have bullish positions. I did partially close silver today because it's overbought, right? It's trying to break to the 52-week high. So I still long silver, but I did trim some of my bearish trades because we are sitting on the key support levels. And finally, please join me live on YouTube. Every Monday and Wednesday, we're live broadcasting our live training room, and Friday we have a strategy roundtable session. If you haven't clicked on subscribe, please click on subscribe, and thank you very much.